get information. Learn, understand the research available out there. Ask your broker, I need information. I need to know, what is this company doing? What is happening in this sector? I want to know. Read in the papers what's going on. When you read something about something in the papers, call your broker and ask, how is this impacting the market? Is this important? Do I need to worry about this? What's the trend of this stock? Ask the right questions. How is this stock performing vis-a-vis its peers? When you ask those questions, it makes investment decision making easier for you. It makes you take informed decisions. And when you make those decisions, don't regret it. I mean, I've had decisions that I've made in the past where I have made a decision and I have made good money. And I've also made decisions that I have lost money. By the way, in all of this, all brokers operate in strict regulatory compliance where before you can invest, you must get approval. So as a broker, before I can invest in anything in the Nigerian equities market, I need to get clarification and authorization from my bank, from my company, allowing me to invest. So I can't make an investment decision without their approval. And what that means is that I am always, at any point in time when I make an investment in the market, my client is of more important priority than me. So whatever would jeopardize my client, I'm not allowed to invest in. So that's what everyone does. You need to we have strict compliance with this thing, people. We can't just put money anywhere. We need to make sure that we put the customers first all the time. So you're always first. Now, that being said, I have made decisions where I have lost money. I've also made decisions where I have made money. But in all of it, you know why I was comfortable? I'll tell you why. Because when I made my decision, I was very aware of the information available, and I made a decision based on the information available. And because of that, I have no regrets. You would never get the call right all the time, and you will never miss the call all the time. But you need to be comfortable with any call you made, because at every point in time, you would make some money, or you could lose some money. But if you take the right steps, like I've told you what to do now, the chances are that you're going to make more money than lose money, right? And that's really the thing. You need to understand that you have more opportunities of making money as opposed to losing money. The issue is making the decisions with the right information and also in the right mindset. Another thing I forgot to mention is also timing. When do you buy? Now, if you are if you're a keen watcher of the market and you're very active as an investor, timing is important. But if you're a passive investor, timing is irrelevant because you have a long-term view. If you're an active trading person, timing is important. So you need to look out for when the market is down. So that's why sometimes contrarians make money, because they are focused on timing. They look at when the market is down and buy, and when the market is up, they sell. So timing is also key. Not all companies pay dividend. It doesn't mean that they're good or bad companies, just maybe their policy is not very strong dividend paying culture. Now, there are some companies who have a high dividend payout ratio. It means that when they make money, they pay a large part of their income as dividend. So what it means is that if the company has a very good year, you're going to get a very good dividend. Now, but there are some companies who prefer, rather than pay dividend, I want to put my money back in my business to grow my business. There's nothing wrong with that, right? So you need to decide what is important to you as an investor. If what is important to you is the income from dividend payment, okay, that means you're looking for companies that are more established in the market, that maybe are not expanding or growing as much. That's the only reason why they would pay you a lot of dividend. Then you want to identify with those companies and invest in those companies. But there are some companies that are still in the growth and building phase that can't afford to pay you the dividend that you want, because every dollar or every naira that they make, they want to put it back in the business to grow the business. So for those businesses, the dividend payouts will be very minimal or will not be as much because they're trying to grow their business. Now, what you then see with those businesses is that you see a situation where their price appreciation is a lot higher, okay, because they're growing over time. So it means that the price in the market, the way investors are perceiving them, is increasing, and because of that perception, the pricing is improving in the market.
and its madness only you can understand. Visit myspectre.com to get your Spectre experience. Spectre, loans in 5 minutes.
So, I mean, I've been in the market for about over 12 years, and I thoroughly enjoy it. I promise you, I totally enjoy it. How do people see it? I mean, they're different. We have different types of investors. So we have retail investors, which include, you and I, and also high net worth individuals. And we have what we call institutional investors, which are predominantly asset managers, people that manage money for other people, and also pension funds. In some insurance companies also invest in the stock market. So where I trade mostly is for institutional clients. I've done retail in the past, but right now I'm more focused on institutional clients. Now, how has the reception, how has my work been in terms of what you're asking me? It's been really good. I think that we continue to get a very positive response from the investing public. More so institutional clients who I deal with, they're very keen to invest in the market. So they invest in the market because sometimes they don't have a choice. So it's been quite good for me. On the retail side, I know that a lot of people that we saw in the market before haven't fully come back in, but they're trickling in slowly. I think a lot of it has to do with awareness, information, which is why I kept on saying information awareness, because it's really all about information and awareness. And I think the more aware they are, the more we'll see them tripping. People are asking me questions now. Before I didn't get questions on retail, I get a lot more questions on saying, I want to invest in the market, what do I need to do? So there's a lot more questions about it now. So people are beginning to think, okay, what next? I'm tired of this equity. I'm tired of cash. I've put my money in deposits. I've done treasury bills. I want more. I want more. I want something more exciting. So we're beginning to have that conversation a lot more now than before. So it's not a hard sell. It's not an easy sell with retail, but it's not a hard sell. We can still engage with investors and get them to come to the market. There's a lot more positive response that we're seeing. So I've said a lot. I've shared with you a lot of information, a lot of wisdom. So what do I want to take away from all of this? I think the first thing I would say is, as I mentioned earlier, start with where you want to end. What are your goals? I've given you different, age ranges to kind of guide you. So what is your goal? If you're a young person, 25-year-old, you want to go to school, or if you're a middle-aged person, you want to buy a house. If you're an older person and you're retiring, what are those goals? Understand what your goals are. That's the first step. The second step, what kind of risk appetite do you have? Are you low risk? Do you have a low risk appetite? Do you have a high risk appetite? Do you have a medium risk appetite? What kind of risk appetite do you have? When you know that, that guides you to the next third thing. What kind of things do I want to invest in? Do I want to invest in blue chip companies? Do I want to invest in companies that, that are more price appreciation focused or dividend yield focused? Then you need to decide what those things are. What kind of investor are you? Are you an active investor? Are you a passive investor? Do you want to look at your portfolio every day? Do you not want to look at your portfolio? What kind of investor are you? Now, you need to understand that. Now, when you do all of that, then you also need to now get information. Remember what I said? The market thrives on information. Everyone in the market is buying because of the information that they perceive to be true. Remember, perceive to be true. So you need to ask yourself, is your information, do you perceive it to be true? Have you done enough homework? Have you read enough? Do you understand enough? If you've done that, information will then drive you to make the decision. And when you make your decision, what I also said is no regrets, people. You can't get the call right all the time. If you could get the call right all the time, you know what you should be doing? Yeah, you should be a magician. Because guess what? That's what we all need. I wish I knew the future. But you can't get the call right all the time, right? But you can get the call right most of the time, and that's where we want to be most of the time to make good decisions. So no regrets. Take your decision and move on. Then in all of this, what do you want to do? Always review your portfolio. If anything changes in your life, review your portfolio, turn things around, make the right decisions, and power on from there.